Welcome to our beginner's guide to trading and investing. Today, we'll be exploring the exciting world of stock trading basics, high-level technical analysis, risk management, and trading psychology. Whether you're a seasoned investor or just starting out, this presentation will provide valuable insights into the fundamentals of trading and help set you on the path to success. So sit back, relax, and get ready to learn. Before we dive into the exciting world of stock trading, let's start with the basics. Stocks represent ownership in a company, and when you buy a stock, you become a shareholder. Trading stocks involves buying and selling these shares on a stock exchange. Investors can profit from stocks in two ways, through capital gains or dividends. Capital gains are made when the value of a stock increases over time, allowing the investor to sell it for a higher price than they paid. Dividends are payments made by companies to their shareholders as a portion of their profits. Technical analysis is a popular approach to analyzing stock price movements and identifying trends. Traders use a variety of tools and techniques to analyze charts and other data, such as moving averages, trend lines, and support and resistance levels. By studying these indicators, traders can make informed decisions about when to buy or sell stocks. For example, if a stock's price is approaching a key resistance level, a trader might decide to sell before the price drops further. Risk management is an essential part of trading and investing. It involves identifying potential risks and taking steps to minimize them. One effective strategy is setting stop-loss orders, which automatically sell a stock if its price falls below a certain level. This can help limit losses and protect your investment. Another key strategy is diversification, which involves spreading your investments across different stocks, sectors, and asset classes. This can help reduce the impact of market volatility and protect against losses in any one area. By managing risk effectively, you can increase your chances of success as a trader or investor. Successful trading requires more than just technical analysis and market knowledge. It also requires a deep understanding of one's own psychology and emotional reactions to market movements. Fear, greed, and overconfidence are just a few of the psychological factors that can negatively impact trading performance. For example, fear can cause traders to exit positions prematurely or avoid taking risks, while greed can lead to overtrading and taking on excessive risk. Overconfidence can lead traders to ignore warning signs and take on positions that are too large or risky. To manage these emotions, it is important to develop a disciplined approach to trading. This means setting clear rules for entering and exiting positions, sticking to a trading plan, and avoiding impulsive decisions based on emotions or market noise. It also means being aware of one's own biases and cognitive limitations, such as confirmation bias or the tendency to overestimate one's own abilities. By staying disciplined and self-aware, traders can improve their chances of success and avoid costly mistakes. In conclusion, we've covered some of the basics of trading and investing for beginners. We've talked about what stocks are, how they're traded, and how investors can profit from them. We've also discussed technical analysis and how it can be used to make informed trading decisions. Additionally, we've emphasized the importance of risk management and provided strategies for managing risk effectively. Finally, we've touched on trading psychology and discussed the psychological factors that can impact trading performance. If you're interested in continuing your education on trading and investing, there are many resources available to you. Online courses, books, and seminars can all provide valuable insights into this exciting field. Additionally, joining a trading community or finding a mentor can offer support and guidance as you navigate the world of trading and investing. Remember, learning is a lifelong process, and with dedication and hard work, anyone can become a successful trader or investor. Thanks for watching. Like and subscribe, and we will catch you on the next one.